I think that's exactly right. If we think about the disappointment of Europe last year, it began quite early. It began March time, and we were all puzzled. It was sort of, was it the snow? And then we were blaming a flu epidemic in Germany. But then obviously it kept going, and it was clear it wasn't temporary, but we still couldn't really pinpoint the problem. I think now, with the benefit of hindsight, we realise what happened in Europe last year was China slowed very abruptly, way before we were worried about the trade war, because of their own internal tightening, focusing on reducing leverage in the shadow banking system. That had a significant impact on the Chinese economy, but we actually saw that more in Europe than we did in China. And I think, therefore, for me, as I look forward for Europe, I need to see China turn first before I really think there's anything that's going to get Europe out of the sort of rut it's in right now.
So my next question is for you, is the question that they asked you. The market's down aggressively from its highs, although up quite significantly from Christmas Eve as well. And so they were asking you, what should you do? Should you buy or sell it, having had these moves? Karen and I were talking about the same story in Italy and constructing bear and bull arguments depending on how much monetary policy support you think you're going to get. But the question is, what does one do now?
Well, I think it's worth, in my view, thinking about the Q4 weakness and subsequent bounce through two prisms. One is what the Fed are up to, and one is the trade war. Because I think in Q4, there was an understanding that this trade war had some potentially quite deep roots. Not only was this about tariffs, intellectual property, but it was essentially about who's going to be the dominant player in global tech. And that seemed to be an area where you couldn't get compromise. And at that point, we had Chairman Powell talking about, well, maybe we do need to take rates into restrictive territory. Maybe we do. And obviously in Q4, the market didn't like that at all. Coming into this year, we heard that President Trump and President Xi are back at the negotiating table, so the Trump element turned. And not only that, we had Chairman Powell say, forget that restrictive territory, not only am I going to be patient on rates, I could even think about changing the outlook for quantitative tightening, and that's what the markets loved. Now, what worries me and what I've been saying to clients about that question, should we buy or sell, is I think we've swung from extreme pessimism on both trade and the Fed to now extreme optimism on we're going to get a resolution on trade and the Fed are going to be keeping patient on rates and loosening the balance sheet. And I think that's too much to ask for. Yeah. We may get one, we certainly won't get both. So I think maybe the markets have bounced a little bit too much, and we still think that's an opportunity, therefore, to take a bit of risk off the table.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.